Meta stock slides despite Q1 earnings beat. AI costs rising as guidance disappoints. Meta Platforms, formerly known as Facebook, reported its first quarter earnings on Wednesday, beating analyst expectations on both revenue and earnings per share. Despite the positive results, the stock slid in after-hours trading as the company's guidance for the rest of the year fell short of expectations. The social media giant reported revenue of $33.67 billion fourth quarter, up 313.68, well above the consensus estimate of $3.29. The company also reported a 12% increase in daily active users, reaching a total of 1.93 billion. Despite the strong performance in the first quarter, Meta's stock price fell by more than 5% in after-hours trading following the earnings release. The main reason for the decline was the company's guidance for the rest of the year, which fell short of analyst expectations. One of the key factors weighing on Meta's guidance is the rising costs associated with its investments in artificial intelligence, AI, and other technology initiatives. The company has been investing heavily in AI to improve its products and services, particularly in areas such as content moderation and ad targeting. These investments have been driving up Meta's expenses, leading to a decline in its operating margin. The company's operating margin for the first quarter was 38%, down from 43% in the same period last year. This trend is expected to continue in the coming quarters, as Meta ramps up its investments in AI and other technology initiatives. In addition to the rising costs associated with AI, Meta is also facing challenges in its advertising business. The company has been grappling with changes to its ad targeting practices, as well as increased competition from other social media platforms. These factors are expected to put pressure on Meta's advertising revenue growth in the coming quarters. Overall, Meta's guidance for the rest of the year disappointed investors, leading to the stock price decline in after-hours trading. The company now expects revenue growth to slow down in the second half of the year, with revenue growth in the low to mid 20% range for the full year. Despite the challenges facing Meta, some analysts remain bullish on the stock. They point to the company's strong user growth and its continued investments in technology as reasons for optimism. However, others are more cautious, citing the rising costs and competitive pressures facing the company. In the wake of the earnings release, Meta's CEO Mark Zuckerberg sought to reassure investors about the company's long-term prospects. In a statement, he said, "We're investing aggressively in building the metaverse, and we're focused on the long term. We believe that this will create significant value for our shareholders over time." The concept of the metaverse, a virtual reality space where users can interact with each other and digital objects, has been a key focus for Meta in recent years. The company sees the metaverse as the future of social media and is investing heavily in developing the technology to support it. Despite the challenges facing Meta, some investors remain optimistic about the company's long-term prospects. They believe that the company's investments in AI and the metaverse will pay off in the long run, driving growth and creating value for shareholders. However, others are more cautious, citing the rising costs and competitive pressures facing the company. They believe that Meta's challenges in its advertising business and the uncertainty surrounding its investments in AI could weigh on the stock in the near term. In conclusion, Meta Platforms reported strong first-quarter earnings, beating analyst expectations on both revenue and earnings per share. However, the stock slid in after-hours trading as the company's guidance for the rest of the year fell short of expectations. Rising costs associated with investments in AI and other technology initiatives, as well as challenges in the advertising business, are weighing on Meta's outlook. While some investors remain optimistic about the company's long-term prospects, others are more cautious. The stock's performance in the coming quarters will depend on how well Meta navigates these challenges and executes on its long-term strategy.